Is gold and silver in big trouble? Gold is at $4,970, silver at $84. Let that sink in for a moment, because what I'm about to say might upset a lot of people, especially the ones who believe gold and silver only go up. This video is not about hype, it's not about fear either, it's about risk. Because when prices are this high, when sentiment is stretched, when everyone sounds confident, that's when the real danger starts to build. And before we go any further, if you follow gold and silver seriously, not hype, not noise, make sure you subscribe. I break down what's actually happening in these markets so you're not caught off guard when moves like this happen. Today we're asking one uncomfortable but necessary question. Are gold and silver in big trouble right now? Stay with me, because we're going to cover why these prices are a red flag, the downside risk nobody wants to talk about, what history tells us, and how smart money thinks when markets get extreme. Let's get into it. Why these prices are a red flag. Gold just under $5,000, silver in the mid 80s. Long term, I like precious metals. Short term, these levels should make you pause. Markets don't move in straight lines, they move in cycles. And when price accelerates too far, too fast, it creates fragility. At these levels, late buyers rush in, weak hands get fully committed, leverage starts creeping into the system. Expectations become unrealistic. Gold and silver don't need bad news to fall. They just need less good news. That's the part most people miss. Sentiment is the real risk. Let's talk sentiment. Right now, the narrative is loud. Inflation forever, fiat currencies collapsing, central banks trapped, gold and silver can't go down. That mindset is dangerous because when everyone agrees, the trade is already crowded. Ask yourself this: if everyone who wants gold already owns it, who's left to buy? At market tops, doubt disappears, caution gets mocked, risk is ignored. That's not strength, that's complacency. And complacency is fuel for violent corrections. Gold versus silver. Why silver is riskier? Gold is emotional. Silver is emotional and explosive. Silver is smaller, thinner, more speculative. When silver moves up, it moves fast. When it falls harder and faster than most people expect. History shows this again and again. If gold sneezes, silver catches pneumonia. That's why downside risk in silver matters more at extreme levels. The liquidity illusion. Here's something rarely discussed. Liquidity. Gold and silver are liquid until they aren't. In stress markets, bid/ask spreads widen. Dealers pull back inventory. Premiums behave strangely. Paper and physical disconnect. When price falls fast, buyers step away. Sellers panic. That's when people discover liquidity was an illusion. What could trigger a drop? So what could actually push gold and silver lower? It doesn't take much. Possibilities include a temporary dollar rally, a deflationary shock, forced liquidations in other markets, profit taking by institutions, margin calls in leveraged trades. Gold doesn't fall because it's broken. It falls because something else breaks. And when that happens, cash wins, at least temporarily. The biggest mistake people make. Here's the biggest mistake I see right now. People confuse long-term conviction with short-term risk. You can believe in gold and still respect downside risk. You can love silver and still expect brutal pullbacks. Smart money asks, where is my risk? Where is my exit? What happens if I'm wrong? Weak money asks, how high can it go? That difference matters more than the price. What I'm watching closely. Here's what I'm watching right now. Volatility spikes, momentum divergence, sentiment extremes, dealer behaviour, physical versus paper pricing gaps. I'm not predicting a crash, I'm preparing for volatility. Markets don't reward emotion, they reward preparation. Conclusion: this could get ugly. So let's answer the question: are gold and silver in big trouble? Not long term, but at these prices, short term risk is very real. If you're holding, understand what you own. If you're buying, understand where you're buying. If you're all in with no plan, that's when things get ugly. And if this video helped you think more clearly about risk, subscribe to the channel. These markets are only getting more volatile, and I break this down as it happens. Comment below, are we near a top or just getting started? Because the next move up or down is going to surprise a lot of people.